So if you clicked on this video, it's probably because you are wondering what trading style suits you the best or what is overall the best trading style. So even though I titled this video swing trading versus day trading, there's actually three different methods of trading. So we have swing trading, day trading, and scalp trading. So let's quickly go over exactly what they are and what the benefit for each one is. Starting off by looking at swing trading, that is generally higher time frame, which means you are trading a daily time frame, 12-hour time frame, weekly time frame, or a monthly time frame. You are only looking at the higher time frame to get an idea, right? You're only analyzing the charts on a higher time frame. That obviously means that when you're executing from a higher time frame, you are also going to hold your trades for a lot longer. So I would classify swing trading as holding onto your trades for days or weeks. Now, the next thing is day trading, okay? A lot of people confuse scalp trading and day trading. They are not the same thing, even though the majority of people think that it is. Day trading is obviously a lower time frame, and you are typically holding your trades from minutes to hours. So what classifies day trading is a trade that is open and closed within the same day. Right. So obviously you cannot hold for days because you have to open it and close it in the same day for that to be considered a day trade. So you're holding on to trades for minutes or hours and you are analyzing the lower time frame. That is typically the 1 hour and below, so 15-minute charts, 5-minute charts, and hourly charts. Now, when it comes to scalp trading, that is a little bit different, okay? That is very low time frame. People go as low as a 5-second time frame. So that's anywhere from the seconds time frame to 1-minute time frame, 2-minute, 3-minute, 4-minute, and 5-minute. That is generally what I would consider scalp trading. And that means you are opening and closing your trades very, very fast. You are typically holding onto your trades no longer than 10 minutes, 20 minutes, or 30 minutes. Some people even hold their trades for 5 seconds, 10 seconds if they're micro scalping. And so there is a significant difference between day trading and scalp trading. Now, let's quickly go over what the benefits are, and we'll start with swing trading. Now, this is my personal opinion. There's nothing factual about the stuff that I'm telling you. This is my opinion. So the first thing is swing trading is higher probability, okay? Now, when I say higher probability, I mean the zones that you are trading tend to be higher probability. First of all, there are way less of whatever zone you're looking at forming on a higher time frame. And people have so much longer to look at a zone and figure out if they want to buy or sell from that zone, which obviously means that you are going to have way more participants at whatever zone you are looking to long or short. So in general, if you have a system that's locked in place, I find it that the higher time frame zones simply have a higher probability of playing out rather than lower time frame zones. Again, because on a day-to-day basis, you may have 10 or 20 of a certain zone forming with intraday price action, but on a higher time frame, you may only get one per week. And so that means that everybody who is looking at that same zone that you're looking at are looking to long from that zone, and therefore you have way more people shorting or longing from that specific zone. Now, the next thing here is fundamental analysis, okay? I know a lot of traders nowadays are not a fan of fundamental analysis, but it is something that you can utilize when you are swing trading. Now, fundamental analysis is things like micro and macroeconomics, geopolitical tensions, and all these different things. It's something that's not related to the chart. So you are trying to predict the economy based off of micro and macroeconomics. So you're getting your information elsewhere, right? You're not using technical analysis when you're talking about fundamental analysis. And so that is something you can use when you are swing trading, which also makes it easier to figure out where an asset is going longer term. And so right here, I wrote trend following / easier. And what I mean by that is if you are trading a well-known asset or a mega cap asset like the NASDAQ, which is obviously the US index fund, well, then you know when you're trading a weekly or a monthly time frame that it's likely going to go higher. So if you're trading a monthly time frame, you always have a directional bias, right? Simply because it's the entire US stock market, which again is likely going to continue higher. You can look at tendencies, right? This has been giving an annual return of 7-something% per year. So you always know that no matter what, almost, that is going going to continue higher. Obviously, recession and these different things can play a role. But again, generally speaking, on a higher time frame, you know what the trend is, which again makes it a lot easier because you don't have to worry about the directional bias as much. And then it comes down to technicals and generally just where you should enter the market and not as much where is the market going. Now, less stress. This is pretty individual. Some people have way more stress when they are in trades for a longer period of time. I personally find it way less stressful simply because I don't have to use my brain 24/7, right? I don't have to make decisions all the time, which I do when I'm scalp trading. So swing trading is generally a lot less stressful in my opinion. Again, because I don't spend as much time swing trading. I'm not constantly making decisions. I'm not constantly looking at the charts, getting new information. So it's just a way less stressful way of trading, in my opinion, when you compare it to things like scalp trading. More free time, right? That's pretty self-explanatory. You have more free time because you have less market exposure. When you're swing trading a daily, weekly, or monthly time frame, you are likely not placing more than 2 or 3 trades per month, which means that you are not going to spend as much time on the charts. Again, it takes days, weeks, or months for your pattern to form out. So if you're looking at a daily or a weekly time frame of a certain chart and your pattern is not there, well, then it's going to take days or weeks for that pattern to play out. Now, if you're trading on a 1-minute time frame, however, the pattern could form within the next 10 minutes and you don't know. Therefore, you have to sit there and monitor it. So way more free time when you were swing trading, right? The next one, statistically more likely to succeed. That is simply factual. You are way more likely to succeed when you are swing trading compared to scalp trading in the longer run. Again, because you can take advantage of things like fundamental analysis. You also have way less market exposure, right? You're not trading all the time. There's also way less chance for you to overtrade because the trades take so long to play out. So there's a bunch of benefit in swing trading. Now with day trading, you obviously get faster results, which I believe can be good and it can be bad depending on the individual. Some people want fast results because they don't have the patience for the entire journey. That means that they are forcing results that they're not supposed to have yet, which is obviously not beneficial. While some people simply doesn't have the patience to wait for the results that swing trading is going to give them, then obviously this could be beneficial if they are still following the rules, not overtrading and doing all these things. Well, then the faster results here may just be for them because they don't have the patience to wait weeks or months for their trade to play out. Prop firms are also way more accessible for day traders. If you take a look at the futures prop firms, 99% of them do not allow you to hold overnight, which means you cannot be a swing trader if you're trading futures accounts. So if you are a person who is trading prop firm, well then day trading might just be the thing for you because again, if you're looking to swing trade, well then you likely need a CFD prop firm. Less fundamental analysis, okay? That means less study time. Some people simply do not want to study micro and macroeconomics. They don't want to stay on top of the economic data. They really just want to rely more on technical analysis, which you obviously can do if you're a day trader. It is way less fundamental. Fundamentals are not really for intraday movements as they take a lot of time to play out the majority of the time. And so it's really not that useful for day traders. And therefore, they can primarily focus on their technical analysis. That can be very beneficial to some people. Some people just prefer that over, having to study fundamental analysis. You can also day trade in pretty much any market condition. And what I mean by that is some people simply won't function properly in a bear market when we're talking about investors or swing traders. They are so used to always long in the market. And that's exactly when we come back to the trend following that I was talking about earlier. So if you are a person who trades the NASDAQ, you are used to long in that asset on a higher time frame pretty much every time you put on a trade. At least if you're looking to capitalize off of bigger moves in the market, you're looking to hold the position for an extended period of time, well then you're likely used to just longing. So whenever a bear market comes around, just like COVID, people have a very hard time getting out of that bullish mindset. So what they'll end up doing is keep buying and keep buying and keep buying in hopes of buying the low. That is way less likely going to happen for day traders as they buy and sell all the time. They are used to selling an asset. They're used to buying an asset. And again, they don't use fundamental analysis. They don't use seasonality. They don't do any of these things. So they are completely fine with selling an asset and buying an asset, which again makes it very easy for day traders to trade in any market condition. Now with scalp trading, you're looking to open and close your trades within minutes, and that's very beneficial to some people and less beneficial to others. Fast profits which can also turn into very fast losses, can be good and it can be bad. If you are a person who simply cannot function when you have a trade open, your heart races, you're not able to manage it properly, well then scalp trading might be better for you because you are able to open and close a position within minutes. And so that can be beneficial for those people, but it also has a flip side because when you're looking at a 5-second or 1-minute time frame, well then your model or system is going to form many times throughout a trading day. That means that a lot of scalp traders have problems with over trading because they see their system appearing over and over again throughout a trading day. And so it becomes very hard for those people to pick apart the good ones and the bad ones, which can very easily result in over trading. So fast profits and losses can obviously be beneficial to some people and less beneficial to other people. Now, scalp trading is purely technical based. Nobody pays attention to the economy or any fundamental analysis when they're trading a 1-minute time frame. It simply doesn't make any sense. If you're looking to open and close a position within 3 minutes, within the geopolitical tensions that's going on, or the inflation rate or the interest rates or all these different things obviously have zero impact on your trade. So that is a purely technical based approach to the market. You are only trading off of technical analysis. Opportunity most days. And what I mean by this is if you're swing trading, well, then you can go weeks or even months without your setup forming. You can go so long without placing an actual trade. With scalp trading, your setup is likely going to give you an opportunity at least once per day. Some people really enjoy that, and that's one of the benefits in scalp trading. Now, another thing that I think a lot of new people could benefit from is more chart time, right? Again, if you're swing trading, well then you're simply just not looking at the charts as much as if you are scalp trading. Scalp traders often spend hours a day at the charts monitoring what's going on, and that obviously means that they have more chart experience than most swing traders do. And so that can be very beneficial, at least in the early stages of your career, to really get an idea of how markets move, less exposed to risk. Now, what I mean by that is you are less exposed because your trades are not open for as long as a swing trader's trades is. So you're not less exposed in terms of you are not putting as much risk on as a swing trader, but you don't have risk on for as long as a swing trader do. And some people simply can't handle being in drawdown for longer periods of time. That causes too much stress and it has an effect on their day-to-day life. And so with scalp trading, you know that once you close your laptop, that workday is done. You don't have to worry about whether your trades are in drawdown. You don't have to worry about whether your trades are in profit because you are done. That can be very beneficial to some people to manage their personal life or separate their personal life from their work life. So again, there is a ton of reasons to swing trade, day trade, or scalp trade, and it all comes down to you personally. And I've actually found that the more I trade and the longer I'm exposed to the markets and have been in the industry, the more I lean towards swing trading. That's because I understand that that can give me a lot more time to do other things. So what I've found is a lot of new people like to day trade and scalp trade because it's exciting. It gives them experience. There's always something to do. But the more experienced you become, the more likely you are to transition into swing trading. Because again, once you've been trading for a long period of time, most likely you have some other business going on. And so by switching to swing trading, you have way more time to dedicate towards that business. So again, you can do whatever you want. There is success stories to swing traders, day trading, and scalp trading. Statistically, though, you are way more likely to succeed when we're talking about swing trading because of fundamental analysis, and you're less exposed to the market, which means less likely to cause all these psychological or mental mistakes. So again, take that as you will. The highest probability of you succeeding is if you start swing trading. Now, that doesn't mean you can't succeed with scalp trading or day trading. It is completely up to you. That was my thoughts on this. That was my pros and cons of the different things and what I've been doing throughout my career. So I really hope you enjoyed this video. Let me know in the comment section below if I helped you out in choosing between swing trading, day trading, and scalp trading.